In our last video, we mentioned the importance of this weekly trend line in red and that the likelihood of a breakdown was increasing as the trend has been tested several times over the last few weeks. This week, that trend line broke, driven by disappointing earnings from Google parent Alphabet. Now, before I give my levels and thoughts for the week ahead, let's review what happened during the week in the Nasdaq 100. The week firstly started off testing this weekly trend line in red after Friday's week close suggested the selling pressure wasn't over. This type of candle highlighted here, an ugly inverse hammer candle, which shows price close right on the low. Normally when you get this kind of candle, the selling isn't done. We actually gapped up overnight on Sunday, but price quickly came back off and the selling resumed, which is normal after Friday's week close. But price did reverse sharply off the weekly trend line, most likely anticipation of the key earnings for the week. Tuesday price pushed higher to test the 20-day moving average before coming off, and the gains were almost single-handedly driven by Tesla. The bounce in Tesla was more technical than anything else, as price had reached the 200-day moving average, so this was the stock trying to bounce off a key technical moving average. With its high weighting, it gave the Nasdaq 100 a lift. But this wasn't enough, as the index paired gains just like Tesla and came off its 20-day. The big momentum shift came on Wednesday, which is when both Microsoft and Alphabet reported earnings. Microsoft beat and the stock rose, but look at Alphabet's share price. The stock had its worst day since the start of the COVID pandemic in March 2020. This was after its cloud business missed analyst estimates, overshadowing its revenue and earnings beat. Microsoft outperformed, but it wasn't enough. This saw the Nasdaq 100 break below the weekly trend line in red, and it broke below the 200-day moving average, which is significant. It's significant because you can see here price retesting the 200-day and holding as resistance. Price came off the 200-day after Meta had become the latest mega-cap tech firm that didn't live up to expectations. This was after the social media company forecast didn't meet estimates. The stock market is forward-looking, so it's not good enough just to report an earnings beat that relates to the quarter that has already gone. Forward guidance is so important. Meta also noted that it was seeing some advertising weakness in the current quarter. The stock was hit and brought the Nasdaq 100 down. The support level called out in the last video was 14,080. The low of the day before price bounced? 14,055. Today we're seeing price remain below the 200-day, and so the selling pressure will remain. We're likely to close the week below the 200-day, which keeps the sellers in control. Amazon is higher today, after reporting better than expected earnings after the close last night, but that hasn't been enough to change momentum. I've said in previous videos that if big names don't keep this market afloat, when these mega cap tech names turn lower, it will bring the index down with it. We're seeing signs of that this week after earnings. This chart here shows the week-to-date performance of the 4 mega-cap names that reported, and even Amazon, which is up big today, is only up 1% on the week. The so-called Magnificent 7, when I shared this chart in the last video, the price-to-earnings ratio of these 7 big companies is now beginning to correct. That has really been the key message this week. In terms of levels to watch in the close and next week, support levels are on watch as we're heading lower. 13,940 is the first support level. If we lose that, 13,720, and then things can get really ugly, and we could ultimately head towards the key support level of 12,940. Upside will be capped by the 200-day, around 14,358. Next week, more big earnings with AMD on Tuesday, Qualcomm on Wednesday, and Apple on Thursday, which will continue to dominate price action. On top of that, we have central banks with the Bank of Japan on Tuesday, the Fed on Wednesday, the Bank of England on Thursday, and the latest payrolls report on Friday. With that said, thanks for watching. Remember to hit that subscribe button so you don't miss out on future content. And I'll see you at the next one.